So now we're going to look at what, I guess we could call it a slight evolvement to the strategy in terms of the way that we look at market structure. So hopefully if you have worked your way through the market structure module in chronological order, you would have seen so far that really we've just looked at, those two main types of structure, one being swing structure and one being internal structure, right? So swing structure, where we get those larger, big swings in price, right, that lead to the swing break of structure. With the swing high and the swing low, we're calling that swing structure, okay? Nice and simple, right? And we can use pip rules if you want to do that, or use discretion in order to sort of classify what you deem to be significant enough of a pullback to deem that as swing structure. Okay, cool, nice and simple. Now, what we have called everything else, or the other pieces of structure that isn't swing structure, right? That isn't those big swing highs and swing lows in the market, we have simply just referred to everything in between that swing high and that swing low. All of this we just referred to as internal structure. Now, whilst that still remains to be true and still the way we will define that, we're just breaking up that internal structure now into two separate pieces of structure with two different names, okay? Just because it makes a lot more sense to do this, and you'll see why as we go through it, okay? So swing structure is exactly the same. Now that internal structure, we are now going to have two types, like I said. One we're still going to call internal, and one we're simply going to now refer to as fractal, okay? Now, I know it can get a bit frustrating where there's all these names and terminologies, but I think it's just really important that we try and have very clear and separate definitions, just so we don't kind of get confused, right, when we are referring to things, because, in the market, sometimes it can get all a little bit, one and the same. So I think it's just good that we try and make these definitions as clear and as separate as possible. Okay, so three types of structure: swing structure, which hopefully we should be very comfortable and familiar with. Everything that isn't swing structure, so everything basically in between the swing high and low, is internal structure, but we're now breaking those up into internal and fractal, okay? So what do I mean by that? Well, very simply, the internal structure we're now going to refer to is those slightly larger swings within the internal structure, okay? So obviously we have these big obvious swings in the market. We'll go through charts examples in a minute to really drive this home, but they're the big, what we call swing structure. But sometimes in between the swing high and the swing low, we can have those slightly larger pullbacks, right? These movements here. They're not quite big enough to be swing structure, but we can see there's large movements in that. But then within those larger swings, right, as we move down, we can have those tiny little pullbacks like that. So what we're trying to do here is basically separate out the difference between this here, what I'm circling, that which we're now calling fractal structure, so it's those very, very tiny movements, and then those larger internal swings. So that's kind of the purpose of this video. We're just separating those out, because before we were basically lumping in, if I get rid of all these orange lines, we were basically calling that pullback the same as that. We were basically referring to both of those as internal, which hopefully for obvious reasons, it's beneficial to separate these out, okay, in a nice and systematic way. So from now on, those larger internal swings, which is simply going to refer to as internal structure, and then these very, very small, tiny swings, we're going to refer to as fractal structure. Okay, so fractal structure, in terms of defining it on the chart, is going to be what we have so far used to look at mapping chalk, to look at mapping change of character. So you know how we have looked at whether or not the previous candle breaks, whether or not the candle breaks the previous candle's high or low, right? When we're looking at mapping change of character, hopefully you guys should be very familiar with that now. That is what we are now going to refer to as fractal structure, okay? And then those larger swings, that's what we're simply going to call those as internal. So hopefully that's clear, and it will become clearer as we go on to the actual charts. Okay, so looking at our basic price action model that we use to kind of go through and explain the theory, how are we now looking at this? Well, it's exactly the same, right? We're in a bullish market trend. We have a swing run to the upside. We then have what we deem to be a significantly sized pullback, right? So that's our swing pullback. We then break that swing high to the upside. So we have a boss. So that's a swing break of structure. So we take out that weak swing high to form that swing higher high. Once we have that swing break of structure, only then can we then look back for the lowest point that took out the swing high, right, after the swing high was created. That then we can now confirm is our swing high or low, okay? Hopefully you guys should be very, very familiar with this by now. If not, please make sure you go back through the content before moving on. Cool, so now we've had, so now we have had that swing break of structure. Okay, we then wait for another significantly sized pullback to know when that swing pullback has begun. But what can we look for to potentially give us an early signal that this move may be happening, that this swing run is over and that swing pullback may be about to commence? Well, the concept that you guys have learned so far in terms of market structure to signal that that swing run may be over and that swing pullback may be about to commence is change of character, right? What do we expect after a break of structure? We expect a swing pullback. How do we know when that swing pullback is going to commence? We look for a change of character. So that is now what we are talking about when we look at fractal structure. It's those tiny little, candlestick movements in price. Where we're looking at, does the previous candle break the prior candle's high? Yes, yes, yes. Then suddenly it doesn't. The next candle fails to break the prior candle's high. So that's where we get that fractal pullback, right? So we get a little pullback in price. Then we move up and then we take that fractal low, okay? So previously I called that internal low, but with these kind of new lessons we're adding in now, we're going to try and refer to this as fractal structure, okay? So that's when we get a bearish change of character. And that's our first little signal from a market structure perspective, right? That potentially something's changing, weakness is stepping in, and we may now potentially be getting a swing pullback, right? It's just one little confluence and one little signal. It is not a guarantee, okay? So in this instance, we come down and then we take out this low here. So this low is what we now call an internal low because it's, a larger internal pullback that we can see, but it's not like a significantly sized pullback. Because obviously in the market, right, markets aren't perfect. They don't move like line charts. We can get these big pullbacks like this, right? Then it can move up, it can have a bit of a pullback, and then it can have like those literally tiny little pauses like that, right? So this is the swing, that's the internal pullback, and that's the fractal pullback, okay? So once we get that fractal break, which is this bit here, that is our change of character, and that is our first signal that the swing pullback may be commencing, right? When we then break an internal low like this, that isn't quite significant enough to be swing structure, but that's another good bearish sign as well. It's a much more significant sign than just a change of character, right? Now, sometimes you won't get a little pullback like that, right? Sometimes that will just be, imagine that's just one perfectly straight line. And in that instance, yes, the internal breaker structure, the IBOS here, will be the same as the CHOC in that instance, okay? They'll line up to the same place because the internal low and the fractal low are at the same area, okay? So sometimes that will happen. Right, but this will become clearer when we look at the charts. Right, so then we get our pullback, and now you can see, right, we get these larger internal swings. This is not swing structure, it's just the larger internal lower lows and lower highs within the overall bullish swing market, right? This is the swing higher low, the swing higher high. We are now having this pullback, okay? So this is all one time frame. That's all I want you to think about. This is just one time frame. Think of the M15 if that helps you. This is all we're looking at, it's one time frame, right? So these are the larger internal swings. We get that internal breaker structure to the downside. We pull back, right? And it keeps going down. Now, this is kind of more realistic of what you'll see in the market where you'll get those little pullbacks, right? Where like the prior candle fails to break the prior candle's low. So we pull back and then we continue down, right? That's exactly what we were looking for marking our highs and lows for CHOC, okay? So what can then happen is we then get that bullish change of character to the upside as we break that fractal high. So what have we learned so far? Well, we've learned that when we have a swing pullback, right, and we pull back, ideally we come down into the discount of the range, etc., etc. We then look for what? We look for a bullish change of character to signal that potentially the swing pullback has now finished and potentially the higher low may now be forming, right? So now we can try and catch that next pro trend swing run to target the week high, okay? That's what we have been using change of character for. It's just one piece of confluence from a market structure perspective that we get that change of character, we break that fractal high, and now potentially, right, that move is going to happen. Now, the problem with this, not the problem, is that change of character is the most aggressive type of structure break, right? Because we're literally just looking at those little candle movements, right? So it's fractal structure because, imagine this is the M15 time frame. That tiny little pullback, that's basically an M1 or an M5 swing pullback, right? It's barely visible in the M15 a lot of the times. Sometimes it will be, but most of the time, right, it's just that little candle pullback. So that's why we're calling it fractal structure. So if price comes into a level that you like, obviously we haven't looked at supply and demand yet, but you guys know we'll be getting to that. And then we're waiting for market structure to shift in our direction to kind of confirm this level, right? We come into here, and then we look for our change of character. Cool, and then we would look for price to pull back and then try and catch that movement to go there. But what can happen, like I was saying, because change of character is very, very aggressive, it can give you those false signals. So you can think, okay, we've come into our discounted demand level. We've had that break of the fractal high to give us our bullish change of character. Okay, now we can assume that that swing high low may be forming, and now we can get long to target that high. But sometimes what can happen is it can be a trap, and then price can continue down. Okay, I'm sure many of you who are already trading this way have experienced that before. So this is where bringing in the internal structure, looking at those slightly larger swings in price, is really going to help us. I know it seems very simple, but it makes a big, big difference when you start to introduce this into your trading. All right, because as you can see, if you follow the larger internal swings, which I'm now drawing with the orange line, right, we can see that although we got a bullish change of character, which is valid, right, where we break that fractal lower high to make a fractal higher high, if you look at the orange internal structure, right, it stays bearish, right? We never take out that high. So you can see the larger internal swings, we get that lower low, lower internal high, lower internal low, lower internal high, lower internal low, right? Lower internal high. So that's when we're trying to buy because of the chalk, but the internal structure never actually changes. Only the fractal structure changes. Okay, so hopefully you guys can see that subtle difference now. Again, it will become clearer when we look at the charts. So then what we can do is if we notice that we don't get that bullish IBOS and the larger internal structure stays bearish, right? That can potentially save us from taking an unnecessary loss within here, right? Or you might want to be aggressive, right? And keep shorting. These are the types of things you want to be thinking about. Now, again, we push down lower, potentially come into even more discounted demand, and then we get another change of character again, right? Where we break that fractal high. So yes, you could look to get long within here. That's absolutely valid, but just be aware that potentially it could come into this level here, right? This current active internal lower high, and then it could stay bearish again. Okay, but if I just get rid of that, once we then get that true internal break of structure, right? So those larger internal swings now puts a internal higher high in, right? Now we have a lot more confirmation because that larger internal structure has now shifted from bearish to bullish. So now the internal structure is truly aligned with the swing structure. Okay, so before what we were kind of saying, which is not obviously as clear cut as this, is before we were saying that once we get a change of character here, right, by looking at those little candle pullbacks, then we were basically saying that the internal structure is now bullish. But that's not really that accurate, right? It's when you get those larger internal swings like this and that then breaks, that's truly when you get a much more a stronger signal that the internal structure is now aligned with the overall swing structure. And this is when you get those highest probability movements, because now we can wait for that pullback to catch the internal higher low, right, which is now aligned with the swing structure. And now these trades become a lot more higher probability to go. Okay, so it's not to say that we can't look for, let's bring this back here. It's not to say at this point that when the internal structure is still bearish, right, this is the current active internal high and this is a low. It's not to say that if you come into a really nice level and we get that initial bullish change of character by breaking the fractal high, you definitely can take this trade. Okay, for you guys who obviously advanced and understand this, we can take this long in, especially if we're coming off the extreme. We expect this to be a strong low. This is a high probability area to do it, right? So we can get in long here, but we just have to accept that when price comes up to this point, that we may, if we're already long, we may want to take partial profits. You may want to. You don't have to, right? But just be thinking about how you want to incorporate this into your own trading, because the internal structure may stay bearish and then that could continue, okay? But once we get that IBOS, right, and the larger internal swing then breaks, and then the larger internal structure is then bullish, that's what I was saying, right? Now we are truly, truly aligned, and this is a much stronger signal now to look for the long within here, to catch that higher low, to now try and get that move, okay? So hopefully that makes sense. I've tried to go quite slow. I know for some of you it's very, very simple and it can seem a bit pedantic, but a lot of you will be going through this for the first time. So I want to try and make it as clear as possible, because I do appreciate, up until now, if you've gone through the market structure module, we've kind of looked at this not in a different way, but in a more simplistic way. Whereas this is a slight adjustment, but you'll see in the live market, especially when you start, trying to trade this live, this will make a very simple but big, big difference to your understanding and expectations of price and ultimately your results. Okay, when to be aggressive, how to manage your trades, when to wait for more confirmation, and just really understanding, why things may have failed and why they worked in some instances and why they didn't in other instances. Okay, so yeah, I'm trying to think if there's anything else I wanted to add to this, but hopefully that makes sense. Let's talk about, I guess, one last thing, weak structure and strong structure. So we know that essentially a strong low, right? So this low here, the reason why it's strong is because it achieved its job. It broke a high, right? So this is weak because that movement never broke any structure. But this becomes a strong low once it causes that break of structure. Okay, so we know that when price is pulling back, we expect the strong low to hold because it broke structure, right? We should know that. We should be very, very comfortable with that theory. Now, you can also apply the strong and high low concept to any form of structure if you want, right? So we can start to apply it to the internal structure as well, okay? So one way to think about this is, let's say we come into our level that we just talked about. We get our bullish IBOS to the upside, right? So we break the bearish internal trend. So now the internal structure is now bullish, right? So now it is aligned with swing structure. We've come off our strong low. Now this should be a strong internal low, right? Because it took out an internal high. So now in theory, when we come down, right, this is why it's high probability or higher probability to now look for longs rather than when we just got the fractal break there, right? Cool, we know that. So now we have a weak high to target, right? And we can continue up. Now, the expectation, right, and this is a nice little rule to have, a nice sort of systematic and mechanical way to think about this, not a guarantee, but just a system to follow, is that when you get that IBOS to the upside, right, and the internal structure is now aligned with the bullish swing structure, we now use the simple rule that we expect this bullish internal structure to continue all the way up until it takes out the weak swing high. Okay, so once this aligns with swing structure, we expect it to continue. We do not expect these lows to be breached. We expect that trend to continue, that internal trend, until that high is taken out, okay? So that's the rule to use. Now, why this becomes useful is because we can continue to obviously look to try and catch each of these higher lows, right? Once we get that aligned, we can then be aggressive and continue to buy higher up and higher up in the market, okay? Because we expect that internal trend to continue. Now, how else we can also use that information is, let's say we get that internal boss, but we haven't yet taken out this swing high, right? Again, I know this is a little bit ahead of what we've learned, but there may be a supply level up here, okay? And we come into a level up here, and then price comes down and it takes out this internal low. Okay, so now what have we had? We have had a bearish internal break of structure. So now the internal structure is now bearish. It's now against the swing structure. And now what we can expect is this low here, this larger low, or this swing low that tried to form, we can now say that it is likely weak, okay? And what we can expect now is that this bearish internal trend will continue until it takes out this swing low. Or sorry, it's not a swing low yet, but this larger internal low. Okay, hopefully that makes sense. So again, I'm gonna go over that again, right? We come into this level here, right? We're expecting the strong swing low to hold, right? That expectation does not change until this low is broken, right? So that will remain true no matter what, right? This will always remain a strong low because it took out a swing high, right? That's set in stone, that will not change. Now, we have bearish internal structure, the larger internal structure, right? We have that bearish trend, we come into our strong low, it then switches bullish when we get the bullish IBOS. So now the internal structure is aligned with the bullish swing structure. Okay, awesome. Now this in theory should be a very high probability area to look for longs because the internal structure is now aligned with the swing structure. So then we continue to buy these internal larger higher lows, these larger internal swings, because once the internal structure is aligned with the swing structure, we now assume, right, that systematic rule, we assume, not a guarantee, but we just assume that this internal structure will continue all the way up to take out the swing high, right? It's just a simple rule that we assume. So then if that rule fails and then we get a bearish IBOS to the downside, right, where we take out that larger internal low, so not like a fractal little chalk, so let me redraw that. So again, to make it clear, we might come up here and have that bullish IBOS, right? And then we might get a bearish change of character, right? Where we take out a fractal low, we get the candlestick that pulls back, right? But all that is a signal. It's just that we might be having that internal pullback to here, right? To then continue. And that's when we get another chalk, right? And then we can look for that. That's what chalk helps us with. But what we're now focusing on is those larger internal swings, remember? So if we get that, this larger internal trend continues, but then it fails to take out the swing high, right? And then we get the bearish IBOS here. Now, This leg of price action, that bullish internal trend, it failed to do its job, which was to take out the swing high. So now we assume that this internal low is going to go of this leg of price action. Okay, when you get that first initial IBOS, we now assume in the same way that we assumed this was going to continue up to take out that. Once it fails and we get that bearish IBOS, now we assume that that low is weak. It's failed to do its job and take out that swing high. So now we assume that this is going to continue, right, until it takes out that. So hopefully that's clear. Now, like I said, this is still strong no matter what. That stays like that no matter what. So price could come all the way down just to sweep this as liquidity, mitigate something in here, and then we could get a bullish IBOS again, right? And then we could continue. And then we would assume that that bullish trend, no, it's going off the charts, but we'd assume that would continue until the swing high goes. So that's the kind of a systematic way or rule in which we use this, right? So I'm hoping I've explained that as clear as I possibly can. Obviously, watch this as many times as you need to and ask any relevant questions that you have in the Discord or in the comment section below. And what we'll do is we'll run through some chart examples to really drive this home. Now, one thing I want to add as well is for some of you guys, you've already worked your way through the course because obviously this is a new lesson. This is tied extremely closely to the concept of order flow, which we are now, we're going to look at when we get into the supply and demand module next. Okay, so if you're working your way through the course for the first time, just be aware now that when you're going to learn the concept order flow in the next module, and just remember that this is very closely tied to that. Okay, so when you watch that lesson, I will remind you of this and probably redirect you back to this video to watch this, and you'll see how it's almost basically one and the same concept. But at the moment, we're just kind of obviously only looking at it from a market structure perspective. But then you'll see how essentially it's all related to supply and demand. And to be honest, that goes for the entire strategy. It's all one and the same thing, that it's all one organic concept, but you just have slightly different lenses and terms for referring to pretty much what is the same thing, okay? Anyway, I'm trying to think of if I've missed anything, but I think that's pretty much everything I wanted to cover. Oh yeah, in terms of how we will then map this, for the internal breaks of structure, again, you can do whatever you want. You can use a candle body, right, like we do with swing, or you can use a wick, but these are my recommendations. Okay, so like we've been doing so far, that doesn't change. For chocks, we're still going to use wick breaks, okay? But for these larger internal swings, we want to see a candle body close to confirm it. Okay, that's at least what I do at the time of recording. If you want to use wick breaks, that's fine, but I would recommend these rules for when you're beginning, okay? So that should hopefully make it nice and clear. So let's just do one super quick summary, if I could do it in the most succinct format. We know we have a swing, a bullish swing trend, right? We get that swing break of structure. So after a swing break of structure, what do we expect? We expect a swing pullback. Purely from a market structure standpoint, what is the first most aggressive signal we can look for to potentially signal that that swing pullback may be about to begin, right? That swing run is over and the swing run may be about to begin. We look for a change of character. So that change of character is what we are calling a break of fractal structure, right? Where we look at those little tiny movements in price, where we're looking at, does the prior candle break the prior candle's high? No, we've pulled back. So now we have that change of character. All right, that's our first signal, but obviously it's very aggressive and you can often get fake signals, right? You can do it a few times, you can get a chock and it can continue up, right? So that's why chock is very, very aggressive and it's that first little signal, and we're going to pair it with more confluence as you work your way through the course, okay? So then let's say that chock does work out and we do start to get that swing pullback, right? Sometimes there'll be, that larger IBOS here, sometimes there won't, but in this case there is, right? So that's an even stronger signal now than a chock, because not only is the fractal structure bearish at this point, but also the larger internal swings are. And really that's what we want our main focus to be on, right? Is those larger internal swings. All right, that's a lot more significant than just the fractal breaks. Okay, so now we have the internal structure is bearish. We can expect that this bearish trend will continue, right? For that swing pullback to come in. Now, what can happen is, like I said, you can get that bullish change of character, that break of fractal structure. And before we were saying that that was our first signal that a high-low may be in place, a swing high-low, and that's absolutely true. But what we have to bear in mind is it's the most aggressive type of break of structure. So we have to be aware of what's going on with the internal structure at the same time, right? And until that internal structure switches bullish, we have to anticipate that price may have only had a bullish change of character. It may only have broken that fractal high just to facilitate that pullback up to here to then form that larger internal lower high to then continue to the downside. So again, we can use that bullish change of character here when it breaks the fractal high as our first sign that that high low may be shifting, that the internal breaker structure may change, but we don't know that until it actually happens. Once we get that IBOS and we get that larger internal higher high, now the internal structure is truly aligned with the swing structure. And now we assume that that internal trend will continue until it takes out that weak swing high. If that doesn't happen, and then we get that bearish IBOS where we break the larger internal higher low to form a internal lower low, now we assume that that run failed to do its job. So now this low becomes weak, and we can now expect that bearish internal structure to hold, to make a series of larger internal lower lows and lower highs until this low breaks. Okay? And then again, if this swing low still may hold, then that can happen, and then we can do this, or maybe we'll switch bearish, who knows. But that's the way in which we use this concept, and hopefully it should keep you out of some premature losses, right? Waiting for that bit of extra confirmation. But like I said, right, you don't have to always wait for there to be an IBOS to want to get long, especially if we come into a really good area of value, etc., etc. You'll learn about this more later in the course, right? If we get this little bullish shock here, you can get in long here. Just understand it's more aggressive, and you may want to take partial profits as price comes up to that lower high, because at this point, what is this? At this point, this is a strong internal lower high because it took out the internal low, right? It's only once that breaks that the internal structure switches bullish. This then becomes that strong internal low, and now this here becomes the highest probability buying opportunity because the large internal structure is now aligned with the swing structure. Okay, I think I've absolutely beaten that horse to death, or whatever the phrase is, flogged it to death, who knows. Yeah, so I'm really hoping that makes sense. I do appreciate that, and obviously, the course was recorded a fair few months ago. Time of this recording is towards the end of May, so there will be walkthrough videos, throughout the course where this is a bit of the tricky thing, where I'm referring to internal structure, but I'm talking about just the chocks. But I'm hoping I can trust you guys to use some nuance and really understand now that this is kind of the way we're really looking at the market, and trying to separate out those little fractal swings in the market with the candlestick pullbacks compared to those larger internal swings, right? And this is a much more effective way of looking at the market, okay? And like I said, this is very, very, very closely tied into the concept of order flow, which we're going to look at in the supply and demand module. So I'm not sure just yet if we're going to go straight into chart examples straight after this or the next lesson. But let's now go and take a look at some real life trade examples, and hopefully this will really start to sink in.